Here we are. Welcome. It's after hours. It wasn't a good day for the bulls. The S&P had a crackdown today based on Europe. 26 handles to that 12. Look at 1234 is where it closed. However, you spent many days up here at the green line. It's called a 200-day simple moving average, and you're gonna, just like when I told everyone when we started the rally up, we had to get above all of these key daily moving averages, and we did, and now we're reversing to them. What is our view of the S&P 500? Tomorrow you're going to have the big crisis going down. People don't believe in it. Another chart that I would like to show you here now will be the following. As part of the S&P and the Dow, the FXE, this here is tied to Europe. We've gone over it a lot. When it is about to come down and test its lows right here. Now, how do you apply this? When this is going down, equities go down. Why? It's tied to Europe, and it's invert. When we were rallying up here, this is when the markets were at their all-time highs in the early calendar year. When it went down, we had a big crisis and put the bottoms in. Then we had that big rally up here to 142. Back down. That's 10 handles on this FXE. If they do not come to a resolution soon, this is going to get very ugly. Because for the bull, it's going to get very, very ugly. For the bear, it's going to get very, 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 very sweet. Because I'm going to show you right here and now. If you break down here, this trend line is where there was a gap back over here. And that's about 131. That's the lower trend line. Now, when you get back to the calendar year lows, 128 on the FXE Euro. If we come down and break these support levels, equities will continue to sell off. That means that the S&P index put options are going to be paying big bank. You will have support levels. You ran through the resistance level of these daily moving averages when we called the bottom of this rally, and that you had to accomplish that to get up here to that 200-day. Now we have what we call a significant intraday daily reversal. We will get support, but just remember, as we went through those bullish movements here in this daily bar, we went through all the moving averages, got above, but let me tell you something. If this XE goes lower, you will come down, sell through these moving averages just like you went through resistance. Support, electronic stop market orders, if we gap below tomorrow morning, or it depends, any upside volatility out of Europe, any move up is a chance to get short the market, and that this can turn into a very, very ugly event, and that this FXE is what people need to be watching, because like I said, there is severe contagion around the world. We're not wrong. What we are right about, though, is that by the rumor of the European hopes that they do the right thing, is buy that rumor, create that upside volatility. The shorts came out over here. When we started rallying in that FXE, we rallied straight up to the top, rallied straight up to the top, rallied right here in the FXE. When we rallied up in the FXE, we went down, period, bottom line. So, MMTs, as you are trained more on this, if we break this and we come all the way back over here to where we were in 2010, where my pointer is, right here, this is going to be right around that 128 area, slightly above it. And this would be the 2011 low. And when Europe was doing well and we were doing well, everybody was doing well, and the FXE went straight up, markets went straight up to their highs, and now we're right back down to these lows again. That's that rally low, and we're coming right back in here. Going into the rest of the month, if we break these support levels, equities go a lot lower, and you will sell down. You will get support, but any support level or any bounces back up, to, this is going to be the key resistance level, is this trend line now. And that the S&P is going to have to hold this support level right here, right above this 1200 handle. That's where that daily breakout bar was. That's the ultimate lower end of that support level. A break below 1200, then we start going back to the last lows that we just rallied off of European news from 1150, and we were about to break that 1150, and we have that analysis. They came in with a headline that Europe was going to do the right thing, and we rallied up. Nice rally. Remember, it's all newsline driven. Risk management, stop management, trade management. The market right now is based on nothing but high super volatility in the equity side of the US side based on the Europe side. So we are at extreme risk. If we get a sell through, you will sell through these. Another thing, the bigger firms in 2012 are going to have to liquidate a lot of assets because they have margin requirements, they have collateral debt requirements they're going to have to meet. There's a whole lot of mess that could get really even much messier than what people really want to believe. And the thing about it is that assets, as most MMTs in our yearly school, they were involved when the assets were marked down from here. And it created another buying opportunity. And you can see right here at the top so how this whole thing worked. It made it right here. You can see straight across here. And what do we call that? Look at that pattern. It's like a V shape. And then what happens is that it always starts with a daily sell, and then it would continue to come down and test the moving averages. And if they don't bounce, they could extremely sell right through them. Just like they took it up, well, hey, they can sell right through them. High alert. Put options. We bought put options on the S&P 500 going forward. We had MMT get some $1,000 puts today. Again, we have bigger players that got right up here yesterday and the day before when we were going through the top. The 1200 January 2011 put, or 12 put rather, at the 1250. And if we come down and hit support, will be big money made on that short side of the tape. And if we do hold support, we have a choice to cash that in, take our profits, and or do exactly what we did over here, buy up and out of the money calls that our MMTs did and made really good entries on it. And here is that 1,000 put today that was traded, and there was some people that were moving in on it. They've been buying this up for several days. Today was a lighter volume day. You can see only 998 contracts traded. And that's one way of protecting yourself below the market. Only for one reason. You can always make the adjustment and come out of it. However, with the contagion, with the fear factor rising, and the VIX and the fears going higher, and the selling today warrants protection, risk management protection to the downside again. And that the upside was to buy and sell the news, and we have been selling it all right today. And buy the rally, sell the rumor, buy the European rumor, buy that they're going to do the right thing and everything's going to be hunky-dory, and then sell into it. That's what we did. S&P 500 is at jeopardy.